Hi and welcome to another session. In this session, we will be learning how to write journal entries. The format of journal entries explained in this video is as per IGCSE and A-Levels curriculum. In case you are studying in an Indian board, that is CBSE or ISE, a separate video has been made for you and the link of that has been provided in the description box below. This is a series and it has 6 videos. Lesson number 1 has explanation of the rules as per the traditional approach. A new series wherein the rules as per the modern approach would be explained is coming soon. Whenever a business starts, there are certain transactions that happen. The journal entries of that have been explained in lesson number 2. When a business purchases assets in cash and on credit, the journal entries of that have been covered in lesson number 3. When a business incurs expenses, the journal entries of that have been explained in lesson number 4. The transactions of sales and purchases in cash and on credit, how to post journal entries, have been explained in lesson number 5. And lesson number 6 contains how to write journal entries when a bank loan is taken and there is interest on loan. I would request you to watch this video in full screen mode as it has accounting formats and the visibility would be best in full screen mode. The accounts can be classified as personal accounts and impersonal accounts. Impersonal accounts can be further classified as real account and as nominal account. The rule for personal account is debit the receiver and credit the giver. Personal account includes accounts of all individuals and businesses. The rule for real account is debit what comes in and credit what goes out. And the rule for real account applies to accounts of all assets, tangible and intangible. And the rule for nominal account is debit all expenses and losses and credit all incomes and gains. All of this has been explained in detail in video number 1. So I would request you to watch that before you learn how to record journal entries. As you are learning how to record journal entries, I have made few steps that you should follow whenever you're recording a journal entry. And the first step is read the transaction. Step number 2 is identify the two aspects or two accounts involved. Step number 3 is identify the class of each account or to which category does the account belong. And step number 4 is apply the rule and identify what to debit and what to credit. And the final step is recording the entry. Now using these steps, we will take 3 transactions and we will apply these steps and record journal entries. As you are learning to record these transactions, I would recommend you to make a note of the accounting rules and these steps in your notebook so that when I'm explaining the rules to you, you will be able to understand how they are applied. Now, let's read the transaction and record a journal entry. So here what we are going to do is we are going to have a separate page wherein we will do the rough work or the workings for this transaction, and on the second page we will be writing the journal entry as per the required format. So the transaction is Norha introduced capital worth 100,000 as cash. So the first step was to read the transaction, and here if you see, based on the steps, I have created this format. Now this format you can draw in your rough notes or in your workings, and you will be filling this format before you actually go ahead and write your journal entry. You need to do this for the first 25 or 50 entries. Once you have understood the logic, then you will be able to write the entries directly. So let's read the format. So the first column is date. The second column is accounts involved. Here you can see the second step was to identify the accounts involved. So that is our second column. The third step is identify the class of each account or to which category it belongs. So the third column is nature of account, wherein under which category the account comes is what we would write. Then what is the rule for this account, and then a column for debit amount and credit amount. Now let's read the transaction and see how do we fill this. So Norha introduced capital worth 100,000 as cash. So the first thing is to identify the two accounts involved. So one account is capital, as capital is coming in the business, and what is the form of this capital? It is coming as cash. So the second account is going to be cash. So cash and capital are the two accounts involved. Now cash is a resource for the business, so it's an asset. You can watch the video of what are assets to understand how do we identify what is an asset or not. So cash is an asset, therefore the rule for real account is going to be applied to cash. And the rule for real account is debit what comes in and credit what goes out. So here cash is coming in, so I have written comes in, and the value will be written in the debit column. Why? Because the rule is debit what comes in. Now the second account is capital. Capital is the account of the owner, and owner is a person. And whenever it is a person or a business, the rule for personal account is going to be applied to it. And the rule for personal account is debit the receiver and credit the giver. Here you must understand that in accounting, the owner and the business are treated as separate entities. Therefore, when owner gives to the business, we will take him as a giver. Why? Because he is giving money to the business, and the rule is debit the receiver, credit the giver. So owner is giving to the business, therefore 100,000 would be credited in capital account. I'll do it one more time. Cash is a real account. It is coming in the business, therefore 100,000 needs to be debited. You can keep referring to the rule, and the steps that I had told you are required to record whenever you are doing a journal entry. Capital is personal account. The owner is giving money to the business, therefore that amount needs to be credited. Now that we have done our rough workings, we are ready to record the transaction. But before we record the transaction, let's learn the format in which this transaction needs to be recorded. So this is the format of a journal. The journal looks like this. So the first column is date, second is details. Then you have debit column, wherein all the amount that needs to be debited would come in this column. And then you have a credit column. Any amount that needs to be credited would be written in this column. Now, how do we use the data of the workings to record in this format is what we would learn ahead. Now, this is how you record. A journal entry has a structure. So while I'm explaining you how to record, I will also teach you what is the structure of a journal entry. In a journal entry, you will always have the name of the account that is going to be debited first, the name of the account that needs to be credited second, and there is a narrative that is always written in the third line or just below this entry that explains what is the journal entry about. So here, let's see how we record. So our date was January 1. Now, if you remember the table, you would remember that cash account had to be debited. So we will write the name cash. This is cash account in the first line, and 100,000 in the debit column, as cash account had to be debited. Now the account that needs to be credited is written in the second line. Now what you have to remember is we will leave few spaces and then write the name of the account that is to be credited. We will not write it just below it. We need to leave this much space and then write the name of the account that is to be credited. Here capital account had to be credited because capital is being given to the business by the owner and the amount 100,000 in the credit column. And then we will write the narrative. Narrative is a brief description of what this entry is about. So here capital introduced in the business. That is the brief description of this journal entry that makes it more meaningful. So anyone who's reading the transaction would be able to understand this completely. So cash account debit. Then in the second line, we'll leave some space and write capital account credit and then the narrative. This is a complete journal entry. Now, let's move to the second transaction. So, the second transaction is on January 2, opened a business bank account and deposited $50,000 in it. So again, first we will do the workings and then we will record the journal entry in the format of a journal. The entry of January 2 would be written just after the entry of January 1 where you had done your workings. So this is a table. The first entry is what you have already recorded. Now we are going to record the second entry continued in the same table of working. Opened a business bank account and deposited 50,000 in the business bank account. So which are the two accounts involved over here? So the two accounts involved over here are bank, because where is this money going? The money is going in the business bank account. And this is cash which is going into the business bank account. So the second account is cash. So the two accounts involved over here are bank and cash. Cash is being deposited in the business bank account. Now, what type of account these two are? Bank is account of an organization. Therefore, the rule for personal account is going to be applied to it. And the rule is debit the receiver and credit the giver. So bank is the receiver of the money. Therefore, bank account needs to be debited. And cash is a resource for the business. It is an asset. So the rule for real account is going to be applied to cash, and cash is going out, and where it is going? It is going in the business bank account. So the rule for real account is debit what comes in the business and credit what goes out of the business. Here cash is going out. Therefore, this 50,000 needs to be credited in the cash account. Now, let's record this in our journal. So this is the journal entry. Again, the structure of the journal entry was the debit entry first, leave some place, and then the credit entry, and then a narrative. So in this table, what we had found out, bank needs to be debited and cash needs to be credited. That is what we would write over here. Bank debit 50,000. Leave some space in the second line, then write the name of the account to be credited. Cash credit by the same amount, which is 50,000. So cash is going out in the business bank account, and the narrative is opened business bank account. Here what you have to understand is you can write the description or the narrative in your own words. It is not necessary that you have to write what I have written. It is just that you need to make it as small as possible, but it also has to be meaningful, so that if anyone is reading the transaction in the journal, they should be able to make sense of this entry. So bank debit, cash credit by amount 50,000 in the debit column for bank and 50,000 in the credit column for cash. Now let's record the final entry. And the final entry is Norha withdrew $500 for private use. Here the owner is withdrawing money for personal use. Again, we will be doing the workings first. So first we recorded the entry of January 1 in the workings, then we did the workings for January 2, and now we will be doing the same thing for this entry. So Norha has withdrawn $500. Whenever the owner withdraws money from the business, it is referred as drawings. So one of the accounts involved over here is drawings. And what is Norha drawing from the business? She is taking cash. So the second account is going to be cash. So the two accounts involved here are drawings and cash. Drawings is the account of the owner. So when the owner invests, it is referred as capital. When the owner withdraws, it is referred as drawings. And capital is personal account. Therefore, drawings would also be personal account because it is the account of the owner. And the rule is debit the receiver and credit the giver. So the owner is receiving from the business. Therefore, drawings account needs to be debited by 500. Cash is real account. It's an asset. Rule is debit what comes in and credit what goes out. So cash is going out of the business. Therefore, cash account would be credited. I'll do one more time. The two accounts involved are drawings and cash. Drawings is account of a person. So therefore, the rule for personal account is going to be applied. And the rule is debit the receiver, credit the giver. The owner is getting money from the business. Therefore, drawings account needs to be debited. Cash is a real account. And the rule for real account is debit what comes in and credit what goes out. Cash is going out of the business. Therefore, 500 needs to be credited in the cash account. Now, let's record this entry in the journal. So, in the journal also, we are recording the entry date-wise. So, first was the entry of January 1. Then we left a line and we will record the entry of January 2. Again, we will leave a line and then we will record the entry of January 3rd. Here, date we have written January 3rd, and in details we will write the name of the accounts that needs to be debited and credited. The account that needs to be debited is drawings account. So drawings account, and in the debit column we write 500. And the credit entry is always written after leaving some space. Cash account needs to be credited. So cash account credit, and in the credit column we write 500. And the narrative is money withdrawn by the owner. So drawings account debit by 500 and cash account credit by 500, and the explanation or the narrative for this is money withdrawn by the owner. I hope you have understood how to record journal entries. As you are learning this subject for the first time, it is always good to watch the video 2 times or go through the concept multiple times so that a deeper understanding of the concept is developed. In case you have doubts, you can leave them in the comment section below. If you found this video useful, give it a thumbs up and subscribe to my channel. Till the next video, bye-bye.